Driver that drives for Uber and Lyft. Joe currently uses multiple phones to efficiently drive for Uber and Lyft. But this can be a pain at times and very unsafe. That was until Joe found Maximo, the rideshare app that automates Uber and Lyft ride requests. Maximo will use the filters set by Joe, like time, distance, and passenger rating, to determine which rides are best suited for Joe. When a ride request comes in, Joe doesn't need to worry. Maximo will automatically accept the ride request that matches his filters, and then turn off the app that isn't currently on a ride. Once Joe finishes the ride, Maximo will turn everything back on. This will allow Joe to focus more on his passengers and driving safe.
Hey, what's up, everybody, and welcome to a Thursday Rodeo Roundtable. This week, it's gonna be a little bit different, but before we jump in, let me run around and introduce everybody here. So straight above me, wow, I nailed that, is Kim's Side Money Plans.
Hey, everyone.
Right that way, God, I'm killing it. Is Gary'sApps.com, and up, well, kind of. Almost.
I'm somewhere.
Is Hannibal. Yeah, I'm going to have to stick my arms all the way through. Hannibal is hungry. And our guest tonight, you guys, is Douglas Mulm. And Douglas is the co-founder and CEO of Stable Insurance. And what is Stable Insurance? It's insurance for gig workers. And you know, a lot of these things trying to help us out here a little bit. So Douglas, welcome. And yeah. So Douglas, can you give us can we jump in by just saying can we just go over a quick overview of what Stable is, giving a better definition than I just did?
Sure. Yeah. So it's rideshare insurance for rideshare drivers. So I can get into the history, like kind of how we got to where we were or are now. But in its essence, where we replace your Progressive policy, your Geico policy, your State Farm policy, the endorsement that you have with it. It's a commercial grade policy that just allows you to do all of your personal driving and kind of that hybrid period, right? That period one, that sometimes you're protected, sometimes you get away with your insurance company, sometimes you don't. We saw a real need for just...
Wait. If I can interrupt you, just in case anybody doesn't know what we're talking about, there's a period 0, 1, 2, and 3. And 0 is when you are not even on it. 1 is when you are waiting for a ping. 2 is when you are on your way to the ping after you've received it and accepted it. And 3 is you've picked up the passenger and you are taking them to their final destination, correct?
That's correct, yeah. And the number of times I've had to explain that to either investors or insurance partners, that whole kind of like schema there. So it's good to kind of level set with what those definitions are. But yeah, so we protect you. We offer you coverage during that P0 and P1 period. And then we have some coverages that augment the cover that Uber and Lyft give you during P2 and P3. So while you're on the platform doing the actual work where you're earning money. We really saw the need for this. I don't know if we want to get into like the history of Stable or if you want to kind of cap it and we can go into some questions. But we've been around for about 4 years, a little over 4 years. And I've been in the rideshare space for about 8 years and cut my teeth in the New York City space. I think all of you are more on the West Coast. So we've got a little East Coast, West Coast battle. I think. Oh, no? Okay.
No, you're surrounded by New York and New Jersey right now.
Okay. You already know about the TLC, right? The mission and all of the wonderful things that they've been doing over the years to rideshare drivers. So
So when I had Marty Young from Buckle On, it was kind of the same thing. We were talking about all these states, not only where they are right now with these AB5 type legislations and stuff, and this stuff coming out, but the ones that are going to be out are going to be already jumping into the law come January, the ones that are looking at evolving. And it's like, I feel like you guys are having to like remap your game plan here on the attack of which states, because until those states get all that junk law out of the way, it's kind of like too much of a gamble, I feel like, for you guys to go there.
A little bit, although we can move pretty quickly from the way we've created our policies. And so we had great partners from an insurance perspective, some people that spent former time at Progressive Commercial, which just for people not in the insurance space, Progressive, I'm sure you've heard of the name, but probably the most profitable, well-run auto insurer and multi-line insurer, but really smart and innovative kind of how they've built their policies and products. And so us being able to work with the people that used to work at Progressive really allowed us to build our policy in a way that is pretty malleable. So if things do change, and they do change quite frequently in this space, a lot of times, unfortunately, the legislature or the departments of insurance don't even know what's in some of the laws or how they work, because they were passed so quickly with Uber and Lyft's help, 5-10 years ago. We can move pretty quickly to allow us to offer the same type of coverage, maybe not for the same price, but hopefully kind of around the same price point, and offering some of the solutions to the same pain points. With the insured don't really care what changes in the policy language, right? What they care about is the price, and am I protected in the way that you tell me I'm protected? We kind of handle all of the background noise of changing the policy language to allow for that.
Okay. So yeah, I wanted to ask about that. So you are the full carrier now. So this is not gap insurance. This is not to add to your insurance. You will in essence be canceling your current policy and going to stable. You will be there even when they're not working insurance.
Correct. Yeah. So we replace, in essence, whatever vehicle policy you had insurance, right? So the insurance you need to get registered in the state you're in. So in Illinois, where we're live right now, when you buy a new vehicle, and all states are this way, you have to have insurance to get it registered. And that's the insurance that we have. It's associated with the vehicle, not an augmented cover for rideshare, and not really the rideshare cover itself that you're getting from Uber and Lyft. It's the underlying insurance needed for the vehicle registration and to stay in compliance with the laws in those states.
I find it truly amazing that you started that you're in Chicago, or Illinois, I know, but Chicago. I mean, that's the city getting the most robberies, shootings for rideshare drive. I mean, so you have to be feeling this.
Well, so this kind of leads into what we consider to be our biggest differentiator. So this was derived from. I can jump into the history a little bit. So I used to have a fleet of rideshare vehicles in New York City. That's really how I learned about the space. I think I was probably one of the first 100 customers that used Uber back in 2011 when they came into New York City. Loved it. I was a prolific user of it. Hated having to get a taxi late at night or gypsy cab, and pay out in cash. So when Uber came on the scene, it's amazing, and drivers loved it at first, right? It was a great way for them to kind of take more control over the taxi and limousine commission, and some of the rental companies that were working there, the taxi stand companies. So I talked to drivers for about 5 years, using Uber 4, 5, 10 times a week, and what I'd honed in on was that rental companies were taking advantage of a lot of the people that were moving in and starting to work in Uber X. So after Uber Black, which was Uber's original intent, right? It's like we're a more airport transfer or luxury limousine, black car type stuff. Uber X came around and kind of allowed anybody in New York City and across the country to use their car to drive. In New York, what you had was an influx of immigrants. It was often the easiest job you could obtain. You could drive very easily, make a lot of money, but you didn't have enough to, one, purchase a car, two, get all of the licenses needed by the Taxi and Limousine Commission, which are upwards of $2,000 a year. And then the insurance itself is anywhere between $4,000 and $10,000 per year, still to this day, but was back then as well. So a lot of drivers just rent, right? They'll pay $300 or $400 per week to have all of these things provided to them: maintenance, insurance, licensing. But a lot of fleet owners were unfortunately taking advantage of that situation. There's a lot of high growth in the space. And so I just saw an opportunity with a friend to purchase vehicles and put them onto the network and try and rent them out in a way where we were going to cut a lot of the costs out of that. We didn't need a lot of employees. We were building technology around onboarding drivers, handling all the maintenance requests, returning vehicles. the goal was really, we'd buy a vehicle, we'd rent it out to the first driver, and hopefully we never see that vehicle again, because that driver would then deliver it to the next person, all via our automated online platform. One of the things that broke down very quickly, people would not pay, people would abandon vehicles. Numerous stories of going to different parts of the tri-state area, picking up vehicles. But a lot of drivers were really good with it, and so it ended up being a very good business to be in. The one problem we always had was the insurance. We could not find insurance that would take into account all of the loss control that we were putting in. So we put dash cams early on in the vehicles.
I saw that. I was going to ask you about that. Yeah.
Yeah. I mean, and so that led into kind of our biggest insight on the insurance side. Dash cams saved us so much money as a fleet. We knew that it was saving our insurance company a lot of money, and we wanted to derive more value from that. And we talked to other fleets and realized they were having the same issue, and then talked to a lot of individual owner operators as well. They said, yeah, I use a dash cam, more and more people are doing it. But sometimes you get a 5% discount. Sometimes you maybe a little bit more. A lot of times it was taken away at renewal. So there's no consistency around, hey, I'm doing a lot to protect myself and my vehicle, this asset, and saving my insurer money, presumably. Why can't I participate in some of that value? So that drove us towards realizing we needed to have a dash cam first policy. So we give a discount of up to 20% if you have a dash cam from our standard pricing. We do things like remove the deductible completely if you get us the footage. The dash cam is so valuable from a claim perspective. We brought a guy in, his name's Dylan, from an insurer nobody's probably heard of. It's called James River. But James River was doing all of Uber's platform insurance. And so
we know about them, yes.
Okay. Yeah. They I think Dylan's seen hundreds of thousands of rideshare claims. And when he came in, he's like, hey, I would pay $1,000 for every one of our drivers to give us claims footage. It's that valuable in adjudicating a claim. So we're really focused on trying to give drivers an incentive to either get a dash cam, or if they already have it, make sure you're always using it. There should be no reason that thing is ever turned off.
Before these people, I want everybody to be able to jump in here because there should be questions about this right now. But I do want to ask, are you using telematics?
Yeah, so we don't use it in our underwriting right now, and we're not currently using it to determine if we're going to renew a policy. It is given the advisors that we have from Progressive. They are very heavy on telematics. I think they.
Yeah, that was what I was kind of wondering is how valuable is that being stable insurance with underwriters and stuff. I mean, like, I know enough about it, not as much as you, I'm sure, but to know that this is going to become invaluable to insurance companies. And you're actually the first insurance company that I'm sure they're doing it, but that I know of that I've talked to that has said, yes, we're in some manner using it or whatever.
So that's the interesting thing. Commercial insurers are definitely using this, right? Large trucking outfits, fleets, even delivery vans, and to some extent, taxis and livery. With personal auto, though, the uptake has been very low, mostly because of privacy concerns in the U.S., right? So do I really want somebody watching my driving behavior? Am I incentivized largely enough?
And maybe we should pause for just a quick second and say what that telematics is. I can say, but maybe you have a better way of defining it. Simple.
Oh, hopefully. So it's really just all of the data that the car is generating as you drive it, right? How fast you're going, how quickly you're turning around a corner. Are you braking harshly? Are you accelerating more quickly than you should? And so you can get that a lot of the times right now directly from the vehicle. So a lot of OEM manufacturers have these devices where you can capture that data. You can get it from your phone. From our dash
there's dash cams. Yeah, I've been telling people this is going to be the new thing with insurance companies. They're going to want this stuff.
Yeah, and it is valuable, but there's always nuance and context to it, right? So if you take the standard personal auto driver and you in California versus maybe Iowa, those people drive in two different ways. And just because the California driver, like on paper, looks more risky, they may not be just because of the type of traffic that they're in. The BQE is a great example of this, right? if you only look at that hour that you're spending on the BQE, you're going to have a lot of harsh braking, but you probably never go over 25 miles an hour. So, and then break it out even further to a rideshare driver, presumably somebody who's built up some experience level or somebody who's been doing it for a while, versus again somebody like me who drives maybe 10,000 miles a year. That person who drives more, they can drive in a different way that may not be as safe for me to drive in. So you always have to relate the telematics to the actual person. I think right now we're still trying to figure out telematics, like how do we aggregate it in a way that makes sense, or better yet, how do companies like us, we can segment at a very granular level, right, per individual driver. It's more the departments of insurance catching up to let us do that. And then we can start pricing just really based on the actual driving activity that you're doing, but also the type of work you're doing. So are you doing delivery right now? I'm not as concerned if you don't have a passenger in your vehicle, so I could probably charge you a little bit less from a liability perspective. Are you doing a lot of airport trips? Are you driving during the day versus the night? Is it raining? Is it snowing where you're at? So the goal is eventually to be able to get so granular where we can tell for each segment, each mile that they're doing, and each portion of work that they're doing, what that actual risk is, and charge appropriately.
I don't know. I'll say the telematics. I hate that. Like, I have that on my current insurance policy. They ding me for so many things. Like, they ding me for speeding because they haven't updated their side of it to go with the updated speed in my area. Like, it's ridiculous.
Well,
As I say, I actually have a question for you. So I'm in New Jersey, one of the highest insurance rates in the country. Are your rates competitive with, New Jersey rates, but also is it like a seamless process to drop a carrier and go into your insurance?
Yeah, so you're not going to like, I'll answer the first question. You're not going to like my answer. It just depends. It's so dependent upon each driver, the type of vehicle that they have, the specific coverages that they want. I can give you a generalized answer for Illinois because that's where we're live right now. Generally, we are cheaper because we look at the mileage that you're putting on from a personal perspective. A lot of rideshare drivers when they go to Geico or Progressive, those insurance companies overestimate the amount of risk that they're actually taking on because of the rideshare work that they're doing. And they're still kind of trying to figure out how to.
They're still overselling them too. They're selling them stuff they don't need. Yeah, I mean, we've known this in the beginning, it was even worse. If you went in there, they just treated it like a blind, you need commercial insurance, like all of it here. It's like, wait a minute, I'm not really sure I do, but
exactly. I have a great story about a carrier I won't name, but I was talking to the agent and trying to explain what I wanted to do. Right, I want to have coverage, but I don't need it for the majority of the miles being put on the vehicle. And he's like, no, I understand, but wouldn't you feel better if you had an extra layer of protection just in case Uber doesn't pay out? I'm like, not for the amount of money that you want to charge me for that. So, so to answer your first question, it really depends on a lot of different factors. Generally, we do seem to be priced more appropriately, I guess is the way I would put it, for the type of risk that we think you're taking on. Often that means that we are saving those customers money versus their current policy, but not always. There are times that we are more expensive than Progressive or Geico.
So I got to ask you this because, and I might often throughout this use Buckle as a comparison just because you guys are very, you're the two companies I know doing this.
Yep.
And if you're doing it a little bit different ways, that's what we're talking about here today. But so when I talked to Marty, he actually broke it down to me to say that, listen, by the end of it, he just was basically like, listen, if you have a credit score of under 650, we're going to save you tons.
Yep.
If you have over 650, we're still going to give you great coverage, but it's probably the same deal you'd go get somewhere else.
Right.
That's kind of, I don't know if that applies to you, but that's what he made it sound like was, they can really benefit those at 650 lower.
Yeah, and I would say that's probably where we're falling in as well. There are some additional coverages that we offer, and I think because we then do the dash cam, we have like real-time look into the miles that are being put on. We can save people over that have over a 650 credit score. I would say again, like don't quote me on any of this because we're still getting a lot of this data in, but probably 50% of the time, if you have over a 650 credit score, we can save you money on your policy. But a much larger percentage of the time when you're under 650, we are going to save you money. We've never used credit score. We didn't really get big into promoting that just because we've always been working on the commercial side. So when we were in New York, we were working with a carrier there. Commercial just doesn't use credit score. It's never been used, and I think it's a great marketing tactic to say that you don't use it. But really, if you go and get a Geico commercial policy, they're not using credit score most likely either. So
I mean, I find it weird when Marty and I were even talking about that. I'm like, I had to stop and think. It's like, you're not buying a car. Why does credit score matter? Your driving is not based on your credit score.
Yeah, so about 30 or 40 years ago, actuaries kind of realized that actuarial science, and we won't dive too deep into this, but all an actuary is trying to do is make some guesses with very limited information, right? So I think you fall into this category of pricing because of these things. And I've seen a lot of other people that have this thing, let's call it a low credit score, also for whatever reason get into an accident more often. And so there's different hypotheses as to why that is. But for the most part, it's shown to be true that you can, if you have no other factor to base it off of, you can base it off of that and probably make money in the insurance space, or make more than you would if you didn't use it. Our view is, though, credit just is, from a commercial perspective, really isn't needed because you're usually tying it to the specific type of work that they're doing. And now even more so, like, we have real-time data, right? So you don't have to make guesses if you have real-time data. If you are able to price off of that real-time data, you shouldn't be using anything that was prior used, things like credit score, what your education level is, are you married, things like that have gone into actuarial scores for a long time.
How many states are you in right now currently?
We are in one state right now. So we were a broker for about 3 years in New York City, working with a company called Hereford. Very great company. They've been around. It's a taxi-owned family business. They started their own insurance carrier to kind of help with the fleet of taxis they had. We did work with them they actually sold their policies for about 1.5 years, but we're working with them for a little bit longer. Realized that we weren't moving as fast as we wanted to in creating the product that we wanted. So we went out and found a reinsurer that allowed us to build specifically what we wanted and would take all of our risk on. So that took us about 1 year to find the reinsurer, build the product, get the technology built up with our internal team to launch that first product. And we did that just about a month ago now, a little over a month ago in Illinois. We'll be live in 3 other states by the end of the year. And then in 2023, that's when we kind of hope to go in some of the bigger states like California and Florida, and then roll out in a much more quick fashion as well.
Do you do you cover like bad drive? I think bad drivers is the wrong word to use, but drivers who have had many like accidents previous, like, do you like roll them in even with past accidents in their history?
Yeah, so if you have an accident, if you have moving violations, even if you have a DUI, we look at that. It is harder and it's more expensive. But the one thing that I like to think about, and we will try to broaden that out even more. One, I don't want to price it in a way that it wouldn't make sense for them to come on, right? If you can go save with Progressive because you've had 3 accidents, you absolutely should. If they have a better way to underwrite that, then go and do that. What we're trying to do is take somebody who maybe started doing rideshare. Something I use myself as an example. I very easily could get into an accident just because of the lack of driving history that I have versus maybe a 2-year veteran of rideshare. Should I have that accident weighted at the beginning of that 3-month period, weighted as heavily, if I then don't have an accident for like 2 years? So we're not quite there yet, mostly from a regulatory perspective and how we have to show a lot of data to show that that's the case, right? Hey, this driver now has another year of experience on, rather than waiting 3 years to take that accident away, can we kind of like remove an accident earlier on in their period? Or like, are there certain tickets that are taking place that a lot of rideshare drivers get. So in New York, there's specific tickets that rideshare drivers are always getting, and you probably shouldn't be counted for on your insurance against those things, like having an earphone in, things like that.
Now, does the make and model of the car, does that weigh into the price of the policy as well? Like like sports cars versus SUVs versus town cars, etc.
Yeah, so a good way to think about it. So when you buy an insurance policy, right, you're paying $500 for your policy. You are paying a portion of that to liability, right? That's what you're paying if you hurt somebody else or damage somebody else's vehicle or their property. And then you maybe are also, if you're financing your vehicle, you're paying for first party comprehensive and collision. And so those are all price. Like if you look on your deck page, your declaration page, you can see the individual prices for all of those that get wrapped up into this one price, this insurance product that you think you have, right? And so often the liability price, which is the thing that is mandated, you absolutely have to have that via the state to get registered. That will be affected by things like how heavy the vehicle is, is it how big the engine is, things like that. But it's a pretty small change that takes place. Right now, the biggest variance we're seeing is in the actual value of the vehicle, and how hard is it to replace some of the parts in that vehicle. And so you'll see the collision portion have a lot of variance depending on the type of vehicle, how old it is, the value of it, how big it is, things like that. And then those prices are also determined by your driving history, your accidents, points, things like that as well.
Do you cover, I lost my train of thought. Do you cover anything other than rideshare, like, food delivery, grocery delivery? Do you cover any other, gig work apps besides rideshare?
Yep. So we do delivery. We don't focus right now on 100% delivery. We are looking to change that. It's mostly a factor of, so if you do delivery work, it can be hard to know if the person that is insured is actually the one doing it, right? So we hear lots of stories about people renting out their Uber Eats or their DoorDash. And we're still trying to figure out ways to kind of get around that. We don't want to get upside down in that and then have to raise prices substantially in a market. And so often if your price goes up because you didn't do anything, right? You've been driving perfectly, you don't speed, never been in an accident, yet your price of insurance continues to go up. There's two reasons for that. One is we're seeing inflation, everything's gonna be more expensive. But then all the other drivers are also probably causing rates to go up for accidents that they get in, or lying or committing fraud. And if insurers don't kind of watch how they grow, then they have to pass those costs along to everybody. So that's definitely not a spot we want to be in to start off with. So we're focusing mostly on rideshare. If you do delivery, we will cover you. We're just kind of looking at how much delivery are you doing versus how much rideshare are you doing today. We hope to change that in the future. If you're just doing delivery, then we'll be able to cover you, but not at this moment right now.
I got to assume Bryant Greening.
Yep. Yeah. Brian.
Okay. Brian, for everybody that has probably watched me interview him before but didn't put the name right to it, Bryant Greening is the CEO founder of Legal Rideshare. He's a friend of mine as well, and Bryant told me that I'm gonna just talk about the two specifically we talked about. He specifically said Grubhub and Instacart, basically, no matter what you do, no matter what insurance you have, no matter what, they're not going to do anything for you no matter what happened. Those two in specific. And I used to like Instacart, but
really? Really?
Oh, fun.
Just as much as I do.
But this is another big problem. From what he told me, they don't do anything for you at all, no matter what you have.
Right. Yeah. And so things like that, right? That causes, because somebody has to pay for those accidents, right? By state law, somebody's going to pay, or the reserve fund of the state pays for it, which that's not a position you want to be in as an insurer. And so, yeah, those things like that cause rates to go up. But yeah, I think we have some solves for it. We're dipping our toe in lightly into delivery and just making sure that we don't get upside down on our risk.
Can we ask what the 3 states are that you'll be in this year?
Yeah, so we are launching in Arizona next. So in about a month and a half. Texas, which takes a little bit longer to get into, but should still be live by the end of the year, and then Tennessee.
Okay, all right.
And so, Kim, actually, I think there's from a financial planning or kind of like thinking about how to protect yourself financially. So obviously, that's what insurance is, right? It's meant to. This is mandated, but if you didn't have insurance, like you would have to pay this amount of money to whomever you had caused harm to, or pay for your own vehicle to be repaired, things like that. I think from a couple of the features that more insurers are starting to offer these for rideshare, but we're not always seeing them all in the same policy. And so what we did, so when we actually were a broker, we obviously talked to a lot of drivers there. We had a lot of customers in New York City. But as we started building out our own product, we wanted to make sure that it was actually offering the protection that drivers wanted beyond some of the mandated coverage. So we have a lot of optional coverages that we've added in that from your financial perspective, I'd be curious if you think like a driver needs to be protected for these things. So the first one we did was loss of use. So just in the instance you're in an accident, we want to make sure that you get a payment daily. You can use that payment for whatever you want. It's either $30, $40, or $50. So it's not going to replace the money that you would have earned working as a rideshare driver, but it can maybe allow you to continue to pay your bills on time, like your car payment, or you can go out and rent another vehicle with it while your vehicle's being repaired. So that was a big one that sometimes you'd see like rental coverage, or sometimes if you went the commercial route, you could get a loss of use product. But it was never priced appropriately, and it wasn't really consistent in how it was offered. The other one we realized was needed was kind of a gap coverage. I think that's probably the most common one that we've seen out there. But a lot of times drivers don't realize they're depreciating the value of their car so quickly, and that disparity between the financed amount of the vehicle and the amount that you'll actually get as a cash payout in the event of a total, that grows pretty quickly. And so we realized that drivers kind of needed that, and that there's also a lot of education there that they don't always understand why they need that. But I think the one I'm most excited about, and I've started to see a few more insurers do this, is the TNC deductible buy down. I think this is where there's the most confusion out there. A lot of times drivers do not realize that if they don't have first party cover, that comp and collision on their underlying insurance that they've purchased, that Uber and Lyft pay them nothing. And then when they do have it, that there's a $2,500 deductible in most things. And so we offer a buy down option where instead of paying the $2,500, you can pay whatever deductible you chose with us. So those are more of what we consider to be financial protection of the work that these drivers are doing, because in the event you do get in an accident, any of those can cause you to have sometimes a catastrophic loss, right? A lot of drivers live paycheck to paycheck. If they stop working for 2 weeks because they're waiting for their car to be repaired, or if they pay $2,500 to get their car repaired, a lot of times these people just exit the market altogether.
So I have to ask this. So I asked Marty the same question. I have to ask you this. Do you see it at this point where if somebody's driving delivery, and only delivery, let's say, just food delivery, do they need to go out and really look all this up and get all this insurance? I know that, yes, the book says yes, but do they? Because everybody's like, if their car gets stolen, they claim it was stolen 3 blocks away, and they go home and call it in, and they do this, or everything's being played. And and from what I've heard, you don't have any coverage anyway. So, I mean, yeah, I'm exaggerating there, but I mean, like, it's so minimal what it's doing in that space that, I mean, even for example, Instacart, they have in their thing that whatever they'll do. And Bryant was saying that everything he's gone up against with Instacart, they have every time not paid what they're supposed to pay according to their agreement.
Yeah. So my view on this is states and insurance companies are just getting better and better at surveillance. And so, yeah, you could maybe run through, even if you got into 3 or 4 accidents, maybe the next insurer you go to will never find out that you did this. But the first time they do, it may be difficult for you ever to get insurance again, or it's going to be astronomically expensive for you to get that. And so I get the view like, hey, like people are lying to me. I'm not getting covered. So
I'm not trying to endorse it. I'm just asking.
I understand it. If I'm just trying to make a buck, like I'm trying to live, right? And other companies that I'm trying to live from aren't allowing me to do that. I get the reason for it. My hope is anybody who is conducting this type of work, right, there's larger aspirations to what they're doing, right? They're going to maybe make a true business out of it, right? And a lot of people do that. They'll do rideshare or delivery either for a period of life or for a long time in life. Some though might just be doing it, for a college break, right? If you're doing that over your 3-month college break in the summer, do you want to take that risk? I think right now you probably can get away with it, but like everything, like the world is shrinking from a data perspective. So everything you do is just becoming more and more known by all the different entities that could know about this. And so this is going to be one of those things like, did I ever commit insurance frauds? That's essentially what's going on, right? And if the answer is yes, 5-10 years from now, more likely than not, people are going to know about it, and it may be difficult for you to live kind of in normal society because of that.
Can I ask a question about gap insurance real quick? Just because I think it's actually something a lot of insurance companies don't talk about. It's so different from car to car because a lot of it is based off of the price of the car and how much money is put into the loss of the car with gap insurance. Do you guys really fill the entire gap of the insurance as far as like loss is concerned? Like how competitive are you guys with that?
Yeah, so it is the actual cash value. So it's on par with what you get from a commercial grade product, which I think is a little bit different than the personal gaps that are out there. But we try to be very clear with that as well. Like this is something that you need to look at on an ongoing basis. So our policies renew every 6 months. You should kind of try to understand how many miles you've accumulated and what the cost of your vehicle, what the replacement cost of your vehicle might be. And what you might be getting paid out for that. So those are 3 different things, right, that are kind of interrelated but are very different, right? So I owe the bank this, I'll get this if it's totaled, which is less. And even then, like right now, if I want to go purchase a new vehicle to do this, I'm probably paying more than either of those values, sometimes combined, unfortunately. So it's just important for drivers, I think, to understand. They should really understand month to month, but at the very least, when you're renewing your policies, you're going out and spending time anyway to go and look for a quote and do some shopping, pricing comparison. Look at how much value, how much your loan still is for on your finance vehicle. Do a quick internet search to see what the value of your vehicle is with the miles that you have, and kind of see what that difference is. And then call your insurance company and say, hey, like, do you have a gap cover? How much would if I got in an accident today, explain to me how much I would get paid out. I see that it says, ACV here. What does that mean? Can you walk me through that? Because sometimes there is a difference on personal and commercial auto insurance on that.
I do think rental insurance, at least for rideshare drivers, even for food delivery drivers, I feel like it's so important because if you get into an accident, you want to keep on going, and having like that rental, insurance that we can like keep on going and not miss a beat. Like, I think that it's so super important for like insurance purposes when it comes to what we do on a daily basis.
Yeah, absolutely. Yeah. And so we looked at, do we give out just a rental option, or do we give you kind of what we assume it's going to cost for you to rent the car? And then you can kind of make that decision yourself. And right now it can be somewhat hard to rent a car. So might not actually find one. So in that case, the insurer can turn around to you and say, hey, sorry, we can't find you a car. Like, there's not any value here in the coverage that you picked. Our view was like, if that does happen, at the very least, you have between $30 and $50 to maybe potentially pay for your car payment. So that's the other thing. Like, what we've seen is kind of a snowball effect of somebody getting into an accident, first not being able to actually get the car fixed, so find that $2,500 to get their car fixed. Then they fall behind on their car payments, and it takes them a long time. Sometimes they don't dig out, but if they do, it takes them a long time to kind of dig out of that. And so our view is like, we want to make sure that that person feels like, yeah, it wasn't an accident, but from a financial perspective, I'm not in a different place other than maybe missing a day or two of work, kind of let the shock wear off, and then getting back to it.
So I want to ask Hannibal, because you said you were in New York, and Hannibal's in New York. And I've never really asked him. Maybe he can't or doesn't want to answer this. But I'm curious how much your car insurance is.
It's expensive. It's
Okay.
very expensive. Well, and I have 2 cars, me and my wife, and I guess I don't need to say the name of the insurance, but I was actually on the phone with him a while ago and asking him, about the rates and everything, and it basically said if you want a lower rate, you got to move. Like the person on the phone said, you should just move because where I live has so much accidents. It is true. It's a lot of cars, very aggressive driving up. I'm sure you've been through it before. So a lot of accidents that happen. The last thing most people want to do is contact their insurance. They a lot of it's like okay, we got into an accident. Let's try to work this out, because if we go tell the insurance about it, then the premiums go up. So it could be frustrating experience, but it's Brooklyn, New York City. It's 8 million people. But I do like the idea of really encouraging people to have the dash cams and having some benefit that it does decrease your the amount of money you're paying every month, because in my current insurance, I've asked if I had if I have a dash cam, does this lower anything? They're like, no, not at all. So I do like this idea that let's encourage everyone to have one, so we can really work out exactly what happened. There's no he said, she said type stuff. So, but in terms of just living here in New York City, it's expensive for everything, but especially for insurance.
Then don't move to New Jersey because it's just as high. So don't come over the bridges.
Okay, I want to know that. I want to know that from Douglas though. Is it as high? Is New Jersey as high as New York?
From an insurance perspective,
yes.
I don't know exactly why that is.
So it's New Jersey.
We're talking about New York City and then maybe New Jersey as a whole. I think if you go to upstate New York, it's probably less expensive, right?
Right. I was talking about
so.
New York City. Like,
right.
Is that really you consider New Jersey as bad? It's New York City.
Also, so some of this is just based off of the way tort law works, right? So in the really bad accidents, how does litigation handled? And so some of your rates are just driven by that purely alone, right? Is this state more advantageous to litigate in or less advantageous from a personal injury perspective? And so this whole company is being built on looking at all of these claims histories and trying to determine things like how much is paid out for soft tissue damage, what the legal climate is in that state or in that specific part of the state, how judges react to different types of plaintiffs' attorneys' requests for damages, and yeah, so New Jersey, the claims, the tort law there, and I think the claims that are paid out can be a little bit more rough, I guess. Definitely other parts of the country, but sometimes in New York as well.
So I'm just everybody, I am looking through your through the chat right now, through the comments to see, because I saw a couple of questions in here, so I'm going to get to them, and I never gave a shout out, so if you guys just bear with me, I'm looking for the questions first. I had not been even looking at these all night. Now there's a bunch.
While you're looking for that, I actually looked up.
I don't know. I saw a few go by, and I was.
Ohio is the cheapest, but they're saying it's the cheapest, but the average premium is still $1,000 for 6 months.
Yeah,
like that still seems really high to me.
Yeah. So again, I'll probably get in trouble by saying this. So this, again, based off of just what we've seen so far, being live for about a month, there's such variance in here. So find the biggest grain of salt you can find and hold on to it. What we've seen, our policies in Illinois for the driver base that we've had is right for full coverage. So that's the common collision in addition to the liability. is kind of in the $700 to $800 range right now. It can go down as low as $180 if you're just doing liability. I've seen it as high as $3,000. So there's a lot of variance in there. But that's kind of what we've seen on average so far.
So I know we kind of addressed this, but here's a question from Eric in the chat who says, is food delivery driver considered a commercial policy? So, okay, even if it's not through you guys or whatever, and people want to have the correct insurance and whatnot, because me personally, I would never call an insurance company and use the word commercial. So is there a term that we could that could help these people that is a good term to use that doesn't put them in the bad right out of the gate or whatever with the agent?
Unfortunately, no. Just because the ultimate intent is like, hey, are you earning money during doing whatever you're doing, right? And then beyond that, are there some pockets that I might be able to go after that is helping you earn this money? So,
well, what about the people who are getting really bad offers and aren't really making any money? I'm just kidding.
That's true. So, like, imagine, I started Doug's food delivery, and it was just, I don't know, pizza stand or something. I had hot dog stand, and I somehow convinced rideshare or delivery drivers to deliver for me. Maybe at first instance, somebody who got hit by one of my delivery drivers might be like, oh, Grubhub, like, nah, I go after this person. When they find out it's just Doug's delivery stand, they're going to be unhappy that, probably don't have that much money behind me.
Right.
So that's what happened. Like, the reason I think you started thinking about from a commercial perspective, is there some money behind this that is going to be able to cover me more so than just a standard auto policy, right? So if I'm just somebody who earns $40,000 a year, let's say, and go to a 9-to-5 job, and I have my minimum limits coverage in Illinois for $25,000, it's not that I'm judgment proof, meaning like I have nothing behind me, but I'm probably am, right? So is a lawyer going to go out of their way to like help somebody? Unless they're just like drastically damaged or injured, or there's a large amount of property damage, but they're probably not going to go out of their way, right, to figure out how to like get their hands on my maybe $10,000 that I have, or probably less. But now, if I have a commercial entity behind me, right, like Uber, Grubhub, or anybody else, right, trucking concerns, delivery drivers, big limo companies. Now all of a sudden, like, hey, I might have a shot at maybe getting more. And it's not, I'm putting these, like, if Brian is listening, he's like, hey man, plaintiff's attorneys aren't that bad. They're not, right? But there are some, right, that maybe can take advantage of it. But even those that don't, that are just fighting for what actually should we do to that person that was injured or the property that was damaged, that was caused. It's obviously easier to get money from somebody who has it than somebody that doesn't. And just via the nature of commercial enterprise, it's usually commercial enterprises that do have the money versus one individual.
I don't know. I just called up my agent and said, hey, I deliver pizza. Do I need extra coverage? I think that was the easiest way to put it.
Mm-hmm.
And?
Yes. State Farm says you do. State Farm does say you do. But I mean, it was extra coverage and it cost me $6 a month. I mean, it wasn't nothing crazy.
Okay.
Oh yeah, I'm gonna have to change mine.
See, but okay. I'm wondering, is there a term for that now that insurance agents are getting? Like, no, I don't need commercial. I just do gig work. Like, is that a thing you can say where they know, oh, you don't need this.
Well, they're going to ask you what type of gig work. Gig work is a broad term.
Okay, but I mean, even once they do, and you're working apps, let's say. So
I mean, I could be doing gig work, hauling heavy oil field equipment.
Yep.
I mean, just saying. Like, hey, you guys said I was covered. I'd pay that $1.5 million out. I don't know what to tell you.
Yeah.
I just like the idea of putting money in drivers' pockets just in case of accidents.
Yeah.
I think it's really, important, to us drivers just to kind of have that money in, our pockets for that just in case.
Yeah. And okay. So for example, one thing Buckle does, again, I don't know if you guys are looking at things like this, because one thing, okay, I'm going to name one thing they did do that I liked. that I didn't expect to hear. And one thing I asked them if they did that they didn't do that I was a little bummed at, because one of the things that they're doing is, well, first of all, I know that with time you can get a little credit and maybe they can help you get an auto loan in Atlanta and Georgia only right now. But one of the things they're doing with Lyft is if you have buckle insurance, Lyft pays you 5 cents more per mile. Is that something you guys are going to be optimizing and looking at as well?
Yeah, and so the way that works is Buckle has decided to take on more of the risk exposure. Some of it definitely always in period 1, but like in looking at their filing, kind of sometimes in period 2 and period 3, it's kind of vague right now, but it seems like they do offer some of that cover, at least whatever cover you've chosen. Right, so if you have a $25,000-$50,000 policy, and they do actually cover in period 2 and period 3. Now, Lyft's insurer doesn't have to pay that first amount of the $50,000, let's say. And so the insurance is cheaper for Lyft. And what Lyft is doing is saying, hey, we will share some of those cost savings with our drivers because of that.
Right. But let's be clear on this, people, though, too. Lyft is doing that because Buckle is an insurance company. So the driver is involved. If there was any way around it, Lyft, even if Lyft was getting a break, they would not be giving out 5 cents per mile to you drivers. Right. It's only because it's an insurance company and there's no other way to make that deal.
Yeah. So we haven't talked to Lyft. We've talked to Uber. We've talked to a lot of smaller rideshare companies, and we're considering doing things similar to that. I think one of the for us, a really interesting thing that we'd love to be able to do. So I told you, right, you get in an accident on period 0 or period 1, we are waiving your deductible, right, as long as you have that dash cam footage. Now, your deductible doesn't get waived on period 2 and period 3. That's not our risk, right? We have no say in that. What we're trying to do is convince the rideshare platforms, hey, we do have this video evidence. It is extremely valuable to you. It's even more valuable to you because you have upwards of $1 million and sometimes higher limits that you might have to pay out. And so don't pay us for it. Can you just give the same benefit that we're giving to our drivers? So lower their deductible from $2,500 to $1,000, or potentially even lower, just wipe it out altogether in some instances. That I think is, in my mind, more interesting than getting a little bit more per mile in some instances.
I mean, Gary and I have even talked to people. We won't talk about any names, but we've talked to people who about specifically dash cam footage, even while you drive, like what that's value is behind it, and some of the ideas there in that space, like actually selling your dash cam footage just to get, license plate numbers of what was on what street. Again, not in a Big Brother style, guys, just like they're trying to, metric it out. Like, these cars are here, these are here, trying to figure out like traffic patterns, things of that nature. So I think dash cam footage is going to become like a next like data gold mine. I think there's a lot of things that could be done with your dash cam footage. I just think you need to be aware of it, because make sure that you're not giving it away for free right now.
Do you have like a limit of how many cars can be on your insurance? Like I'm a 2-car family, in my household. So do you have like a limit or how many cars can be on a policy?
Not technically. So the way we do it right now is you do have to have a rideshare account. So you and your partner both had a rideshare account, or you drove both of those vehicles for rideshare and they're both registered on a rideshare platform, then they could both be insured through us. Again, that was kind of our starting point. There's a lot of ways we want to move out. We do realize that we'll have more than one vehicle. What we do offer is your partner, your children, household members can get insured even if they're not rideshare drivers, if they're not on a platform right now. And so we have a way to go through and do that and kind of look at how many miles you are putting on those networks versus like your children or your partner. Over time, this is a really interesting insight that we kind of came up with. So you as a rideshare driver, sometimes you're putting on 5 or 10x the number of miles in a year that a standard person puts on. So you're getting trained up to drive better in most instances. You're getting more experience, especially if you're driving kind of in the same areas. You know, if there's like a branch hanging over a stop sign or something like that. So once somebody stops doing rideshare, or they do a very small amount of it, we've now collected all of this data on you, and we can tell that you are a very good driver, or you're this type of driver, right? Versus you then going to Progressive and just getting a personal auto policy. We want to be able to try and use that in the future to reward you, right? To say, hey, like, you do have a low credit score and you are only 24 years old. And so when you go back to that, we've now collected 2 years of data on you, but when you go back and stop doing rideshare work, you are going to pay a lot more in insurance, unfortunately. Why can't we offer you a personal auto policy? So that's probably the first non-rideshare direction that we move in. But definitely we want to try and offer other types of coverage for people, whether it's us building it or us partnering. So probably the biggest pushback we get right now is, hey, I bundle, right? I have the State Farm because I own my home, or I get my renters through that, and I get a 5% discount because of that.
Right. That's what Pia's saying right now in the chat is, you know, bundle, you know, pretty much.
Yeah. So we don't offer anything like that right now, but we do hope to have options for that down the road. The way we look at it still is, often you probably are going to save more. We should at least look at it, right? What would it look like if you unbundle, right, and went with us? And if at the end of the day you're buying one policy from this place and one policy from us, and you're still paying less, then it's still a good option to consider.
So Brian Johnson, I'm going to put up on the screen one of his comments, but he's from Florida, and he was saying that, you know, he hasn't had an accident. I saw it earlier in the chat here, in 30 years, and his insurance is through the roof. And I know this about Florida to begin with, but so nothing in 30 years. Guy pays his insurance. Nothing good is happening in Florida. And in fact, one of his comments was like, if this keeps up, nobody will be able to drive. Yeah, here it is, and won't be able to drive. And he's going through insurance companies. I mean, how do you guys view Florida? And I'm not, and states like that where it's so tough that. Since
my insurance is in Florida, let me speak on this too. Florida is a no-fault state. That means that if you have liability, you T-bone somebody, you cause $100,000 worth of damage, it doesn't matter. You got a guaranteed $10,000 up front, and that's all they have to pay. So with Florida insurance, you're pretty much getting insurance to cover you yourself, because everybody has to look out for themselves.
That is one of the issues. The other issue is, we were talking about New Jersey and some of the litigation there. Florida, it's unfortunately worse. It doesn't always seep down, like from a practical perspective, it doesn't always seep down to a $50,000 policy, right? That's the max to be paid out in a lot of instances on these personal auto policies. I believe that's also the limits in Florida. But because there are a lot of nuclear verdicts there from high liability policies, Florida gets pegged with that. And so we talk about this with our reinsurer. We really want to go to Florida. We think there's a lot of work we can do there because of dash cams, where we can hold a competitive price, especially in that market. They obviously are concerned because of all of this as well. This is there's education that we're doing just with our insurance partners, right? Because they don't always look at the types of policies that we look at. There's so many different types of cover just in commercial auto alone. Different limits, different ways things are covered, and then obviously each state that you go into is different. Florida is unfortunately one of those states where it is still the legal climate is not the best. The other issue that's been cropping up more there is just some of the weather, right? So I talked about the first party, the collision side of it, but there's also the comprehensive side. So comprehensive covers you for things like your car getting stolen, tree falling on your car, hail damage, things like that. And so there's unfortunately just a lot more severe weather events taking place in Florida right now, which is leading to comprehensive rates to go up. So you may see that the liability is relatively small, that top line portion of what you're paying that's mandated. But if you have the need to get comprehensive insurance because your bank tells you need to, or you're just trying to protect yourself, that number is going up pretty drastically as well right now.
So, okay. So this, I think that I was reading this right. I just wanted to make sure. So what's the benefit? So this is Roy asking. So what's the benefit if you run insurance the same as other companies, and have done your research to determine if you're cheaper than just getting endorsement from current insurance. And I guess we would be talking about only Illinois in this case.
Mm-hmm. Yeah. So like I said earlier, I think the main benefit is us really incentivizing the use of your dash cam, right? So more often than not, so we do subsidize dash cams. It's not the whole price, but there's we have deals right now where you can get a cheaper dash cam, and it fluctuates depending on like right now in Illinois, we're giving out $5 dash cams. That's not going to stick around forever, but it'll always be you'll always be able to get it cheaper through us than you could through any of the other providers that we work with.
Sure,
we do subsidize it. Then you also get that 20% discount, right? So that right there means you probably are going to pay less with us, and you're going to get more value, right? So if our policy is $800 and Progressive is $800, you're getting a dash cam with ours with that, right? You're getting that paid for at some instance. So that's probably the biggest benefit, at least from a pricing perspective. Like I said, knowing that you're covered for period one, right? That we are going to pay out those claims. That's not always important to people until they get into an accident and they have to cover it themselves. And then some of the additional coverages that we've added on. I haven't really gone into, so obviously we collect all this data, right? We collect data from the dash cams, from the telematics devices and the dash cams, from the platforms themselves. We collect data as well. And so what we try to do is turn around and provide some value back to you. And we're getting better at that all the time. I think the software that we're building is continuing to improve.
I think that's going to be key in the future. I think that people are not going to, because people already have a hard time understanding the difference when we talk about shared data as opposed to sold data.
Mm-hmm.
You know, and it's I think that for people to be okay with what's going on with data, I think that there's going to have to start being incentives back, because it's not going to be like, hey, check this box and we don't need your data. You actually do need their data. So I mean, it's got to be something coming back to them more than just, you know. So I think that not just you guys, I'm just talking about everything. If people are going to want data, they're going to need to start rewarding people for it.
Absolutely. I mean, there's so much value being created out of the data that you're generating in insurers and social media companies, whatever it is. Often that value is not being shared back with you. And so we're experimenting with different ways. We're not giving cash payments out for anything right now, but just trying to say, hey, like you could get a low level of analytics from us, for instance, on like how you're driving across different platforms, because you do hook your rideshare platforms up to our insurance to allow us to underwrite this. So is that enough value, right? You could go to Gridwise and pay more sometimes to get that data, for you, or can we offer that for free or for lower price, or even sometimes in conjunction with companies like Gridwise, right?
I do. You know, Gary's familiar with them. I've done work with Para, so we've also worked with Argyle, and I'm sure you work with Argyle or have.
Yep.
But this question, so John's from California, and he has State Farm insurance, and he says that as long that he does food delivery, and as long as he's using his car 50% of the time for food delivery, he can get covered. How do they know that?
They're asking him a question. They're hoping John is telling the truth. So go get a quote right now online, right? They'll ask you questions that you can easily lie on if you want to, right? How many miles are you driving? Even like, what's your address, right?
But down the line, I mean, like even with kind of what you guys are doing, you're covering people all the time, but you're going to know when they're working, when they're on personal.
So does State Farm though, because like I said, with State Farm, I have State Farm as well, and they really want you to get this app called Drive Safe and Save. And it basically tells them exactly what you're doing, records your trips, and gives you a driving score, etc. That's why I said I hate the metrics behind it, because it's never right. Like it flags me, even if I'm riding passenger in my car and I'm on my phone, it flags me for using my phone, but I'm passenger. It flags me for, speed limits, and it records every trip you do. So they can pretty much see if you're picking up from restaurant to restaurant to restaurant.
Right.
Talk about Big Brother right there.
Yeah. In fact, this how bad I suck. I only got an 81.
Wow. Actually, I have a question. So for rideshare and food delivery, it seems like they're so different as far as like coverage, just because of I'm assuming different liabilities. And I can probably say a lot of us do a whole bunch of different apps now combined between rideshare and food delivery and grocery delivery. Like, is there a long-term objective of kind of marrying kind of all delivery worlds?
Being in the marketplace, like
Yeah.
consolidation between Grubhub and Uber Eats and things like that.
Even like insurance coverage wise, like I know you were saying like there was like, you know, a difference between rideshare coverage and like food delivery coverage, and there's like there's differences between two. Is there like any kind of long-term objectives that there might be like coverage for like both, or any kind of long-term objectives for that?
Yeah, I mean, I can give you our long-term objective, and I hope we reach it at some point. It's not entirely up to us. Like, we do have to get things approved by the states, but even then, from a technology perspective, we aren't there yet. But the goal for us is to say, hey, like for every, really, you could do it by the foot if you wanted, but there's probably diminishing returns at a certain length of distance. Let's call it a mile. For every mile of driving that you do, we would want to know what type of activity you're doing. Right? You have a passenger in your vehicle? Do you have food in your vehicle? What time of day are you driving? Are you doing, are you driving on the freeway versus driving in like stop and go traffic? Two very different types of risks. All of those things could lead to us being able to price on a per mile basis. Like, so the risk that you're taking on, the time of day, type of vehicle you're in at that point, have you had enough sleep, things like that. That would be the perfect world. Some people might not like that though. We're still trying to figure out like, hey, if we could actually give you a per mile cost of your risk, and then we add on, right, some portion to make sure that we can make money and pay out claims and do all the things that we need to do to survive as an insurance company. And we're transparent with it all, right? You had a breakdown if you wanted to, you could go see all of that. That, in my mind, would be an interesting world to be in. I don't know if it's the world everybody wants to be in, though, because what happens in that is somebody who is making money doing rideshare right now, but is at awful risk to Uber and an awful risk to us, you can kind of hide behind that. And other people are paying for that, right? The really good drivers are paying for that. But if it turns into a world where you can only make money doing rideshare and delivery, if you are a perfect good driver, is that the world that everybody wants to be in? And I don't think we've really answered that question
yet. My gosh, do we have anything? Thank you, Eric. I appreciate that. I know a lot of times we have another creator sitting in. It's not very often we have a CEO on the panel. We usually don't have a CEO that is daring enough to be on the panel. To be honest,
we're not so bad. Come on, Steve.
No, but it's usually one-on-one interviews. They want to do it not live, and then I can post the video, but they don't want to do it live, and I get it. It's just a different thing, but I like it when they will. I like to, because other questions come out, and then the live chat gets to see it, and it makes it more real, I think. So, yeah. But thank you, Eric. And I don't know. Have we covered everything?
I think so. Very informative. Lot to take in, actually.
Yeah, I was whoever's posting for Stable Insurance, I think that maybe you were. I know, good job, but I think you might have been a little behind. Maybe they weren't live because the question or all the posts were like coming in like 5 minutes. Like when I saw this, it was like a few minutes after. It was like, wait a minute.
They're doing pretty well.
Come on, Steve. It's a company. They got to make sure they put out the right information.
No, they did a great. They got to
bring it up real quick.
I'm showing them.
This is great. So somebody's like, Doug's not saying the right thing, so I need to step in.
No, they're saying the right thing.
Yeah.
They're saying the same thing as you. Yeah, it's
Yeah, Steve, you can go. Oh, you go right back to the latest comment there.
Our deductible waiver. Did we cover that?
We did.
Oh.
For dash cam footage.
Oh yeah. Okay.
No, you don't be sorry.
Actually, I have one more question. Is it a requirement to actually have a dash cam to have your insurance?
No. So yeah, so we have basically 3 different pricing points. And if you have no dash cam, we'll still write you a policy. It's probably going to be prohibitively expensive. Like, you'd be better to go elsewhere. But yeah, we will write that policy for you. You can have any dash cam. We know a lot of drivers already spent money on getting a dash cam. Some don't want a cloud-based dash cam, and so they go to Amazon, buy something for $100.
I'm shocked just insurance companies, forget gig work. I'm shocked insurance companies aren't offering discounts. Just, hey, do you have a dash cam?
Yeah.
Like, just for people living, using their car for whatever they use it for. Like, I would just think you'd want to give them a discount if they're running a dash cam.
I think 5 years from now, it'll be a much different landscape for dash cams. I think it'll be much more commonplace. You will get more value from your insurer for it. I mean, insurers are very slow moving animals. It takes them a while to kind of see the value in different things, and it depends on the leadership in the company. They have personal auto is not the only thing Progressive does, for instance, and so obviously there's teams heading that up and SVPs that are working on that specifically. But sometimes that person may not believe in dash cams as much as others. So it really just depends on the makeup of the organization. But I think enough is getting proven with dash cams, enough insurers. We have a number of transportation insurance executives that have invested in us from smaller insurers around the country. And all of us believe in dash cams. So it's kind of fun to get all those same investors believing in the same thing. But yeah, I think dash cams will be much more prolific over the next 5 years, and you will get more discounts because of that. Quickly to answer Kim's question, any dash cam, you get 10% off with us. If you use one of our cloud-based preferred dash cam providers, so right now that's Display Ride and Driver Technologies, both great companies.
No, I work with Abdul a little bit with Display Ride, so I like what he's doing. Yeah. It's definitely, I like that it's cloud-based. Gary and I were talking about just a couple little things that we didn't love. Like, I don't know if you remember OwlCam. I don't think you can find them anymore. I don't think they're doing it as hard as they were.
Nexar is the same thing, though. Nexar is the same thing.
But where, like, it's plugged in, and if anybody even approaches the car at night and it's off, or if they touch your bumper, it comes on, and they're going to get that zone, and it's a clear picture too. Like, don't get me wrong, Display Ride is amazing because it's a free camera for people. It's a great service. You got cloud upload. You can push in real time for the footage to be sent to your phone in 30 seconds for the last 2 minutes. So there's a lot of perks in it. And I think there's a lot coming down the line with that too. I just, I'm kind of with Gary. Gary and I were talking about that. And I would like to know that if somebody runs into my car at night when I'm sleeping, that it got caught, you know, I mean,
right. Or that we'd be able to go back and review that footage manually ourselves or something to that base. Like, you know, most cloud-based cameras right now, you can't go back and review all the footage. You know, you can only grab certain time frames or, you know, little snippets here or there, or your car has to be on. And so I think that's why, until they come up with a better system for that, I think they're okay if you're driving and you park in your garage or something, but I don't know. I still prefer the ones that capture everything.
Yeah.
Well, I think, guys, we've run our course of time this week, and I am so sorry, guys, that I did not get to the shout-outs in the chat. I see there were a lot of you in there, and I see there were a lot of good comments. So I'll be going back through that, and I will absolutely, I'll explain to Doug when we're done here that we can't see the live chat for about 12 hours, but even going back through here and looking at you might want to go back and look through some of this too. There's some good chat. These are pretty good. I mean, all of these people are pretty heavy gig workers, so that I see in here. They're pretty much full time, so they're good people to get feedback and insights on. But and also didn't do the shout outs. I want to give the props to Solo Moves and GaryZapps.com. Don't forget about Gary's Apps.
Yeah, Gary's Apps.
Also, always feel free to reach out to me at steve@ridesharerodeo.com. I want to thank the weekly panel, and I want to thank, obviously, our guest CEO of Stable Insurance. I'm sure that if you guys have questions Him and his team are more than happy to answer them, and I will put all of his information in the show notes, so you guys will be able to reach out to him as well, unless he tells me otherwise when we're done and says no.
We're all good. Even if we reach out and have a conversation with us, we love talking about insurance. So
Okay.
we'll talk to anybody.
Yeah, because I mean, like another thing is that a lot of us are just really, it's just confusing. It's confusing. I mean, in the gig space especially, like what's going on? Like what do I need to have? Because we've watched it go from you just need blanket commercial insurance for $10,000 a month. Really? Because I can't pay that. It's like, never mind. I just won't tell you that I need it then. Like, I mean, I know that. And I guess that maybe that's the last question that I do have for you. What do you estimate, if you had to guess? And you don't have to be nice. Like, what do you estimate the amount of drivers who don't carry the right insurance is?
Oh, I think it's 50-50 right now. I mean, there are.
I was going to say 90-10.
I was going to say
75-25.
I'm going to throw in people who think they have the right insurance that don't, and it could be something as simple as like I didn't realize that like I have the liability. I've gone and told my insurer that I'm doing this, but I don't realize that I'm not covered for. I didn't get first party cover, and so I don't realize that Uber and Lyft don't cover me for that. The number of conversations I've had, unfortunately, and that our team has with people that don't realize that it's unfortunate, and I feel like the rideshare company should do more to explain it. I mean, it is on the site, but this is such dense, confusing, and frankly boring, right? Nobody really wants to like.
Well, they play the independent contractor card. If they had to go and explain this to people, they would not be able to have the churn rate they have. Harry and I have talked about this before, Harry, the rideshare guy. And, they obviously not only they hide behind, I should say, the independent contractor card, because they could, it used to be that I was under the illusion that they can't tell you because you're an independent contractor how to do your job. But actually they can tell you because they can make you watch rain videos about how to be sexually appropriate, how to do rides. They can make you watch those before you can get on the platform. So they could say to you, hey, make sure you got the right insurance. Yeah. I mean, they don't even do that.
No, it's pretty limited, I think, the information they give you, unfortunately.
Yeah. So, well, again, I want to thank you for our time. I want to thank the panel. I want to thank the weekly chat. And next week, the next 5 weeks, you guys, we have great guests. They're all creators, and none of them have ever been on the show before. So I've just got the next 5 booked. And it's going to be a lot of fun. You guys are the best. Be safe, earn smart, spin some good into this crazy world. We're going to play that outro song. And if you could stick around for just 40 seconds while it ends, we'll sign off with you, Douglas, backstage. But thank you, everybody, for joining us. And we will see you back here next week on the Rodeo Roundtable. Peace.